So now I'm going to bring you some analysis in Apple. And what I want to do is a little teaching right now. And I made a point earlier in the show that the Apple analysis is in alignment with what I'm looking for in the stock market, which is a dip coming in December, and then another move to the upside. So I'm going to do this, show you this analysis in Apple, and then we're going to go to the spiders, to the SPY, and look at it there also. So I'm going to move here from the gold market to AAPL, and here you will see an Apple weekly chart. So this is just a chart that shows you our moving averages that we like to use on a weekly chart. This one right over here is the blue one. The slow one is the 34-week moving average. That is often a place that in cyclical movement it's like a magnet. It comes back down to it. When a stock is very, very strong, sometimes it only comes down to the 13-week moving average. And the whole moving average, which is this one right in here, is a very, very good indicator of direction, momentum, and also helps us as a guide for the cyclical rhythm. So when you look at this, you could say, okay, well, I could see it going up and down, but do I really understand money flow looking at this? So what I'm going to do now, I just wanted to show you this chart. I'm going to bring in our weekly analysis. So kind of take a look at what you're seeing right over here. And then all of a sudden, I'm going to bring in money flow rhythms that are just spectacular as far as the information they give you. And also, before I do that, let's just take a look right over here. I want you to note that there's a triangle formation right in here. And triangles are often a consolidation, and you could see the breakout there. Why actually is there a breakout? What made it the risk rewards that it was going to go to the upside? Well, let's take a look here as I switch over to Apple weekly cycle analysis, and you could see that right here. Now on the bottom are the cycle brackets. Those are simply a drawing tool that is a guide to help us. That helps us see where the money flow is and how the money flow breaks down from these big, what we call harmonic families, that is this dominant and minor cycles, and how that changes as far as the flow of money in these smaller patterns. So what we have here is a major low where they both come down to a bottom right over here. This was quite strong, and you can see these upward arrows show you what we call positively configured cycles, whereas each high is higher and each low is higher, and you have that right over here. So you had these cycles bottom right there, as you can see. Let me get a closer look. And the time frame for that bottom was plus or minus 3 bars from the ideal low expected here, and you could see where that low came. You can also see this was swamped. There was almost no decline right there, and then this one right over here was a pretty good decline, and then it comes down and tests it, or not quite, on these lows right here, and then begins to move up. Now you understand both of these cycles pushing up. That's why you had the triangular shape in here, destined to break out because of that upward force that was going on. And you can see that right there, and now moving up into these resistance zones. So we have these resistance zones as sell zones right in here, and one of the reasons is because it's much weaker than the market. So somewhere in here between this area of 124 and 130, the stock is likely to reject, and you saw it rejected here from about 125 and then came down again. So we're kind of looking for range-bound trade in here, but potentially getting up to 130, and then in January getting potentially up here to 136. So for now, this was a sell zone, and we would expect it to have some difficulty in that area. But overall, this trend looks pretty good to me, and though it might struggle a little bit, and you can see this here where it peaks somewhere in January and then comes down into early February, then we'll see how this top really forms in here. Let's look at the daily chart right now and do the same thing, because I want to explain why I think that there's a dip in December and how that is going to align with the stock market. So here you see the Apple daily chart. This has the slim ribbon on it, which is our momentum indicator. And you can see in here in this period where it was building that triangle, it's the slim, when the slim ribbon is laying on top of itself, it is not, there's no momentum. All you're going to get is chop that you see right over here. That's one of the reasons why I think the stock does not have a lot of upside. And then when you look at this 89-day moving average right here, it's getting some support from it, which it really should. So that kind of gives you some sense where the downside would be in here. This now, when you're looking at this, what are the short-term rhythms? How do you define where, when it's going to go up, when it's going to go down? Well, I'm going to bring in the daily right here of the cycle analysis. And now you have it. You can see right in the bottom how it defines each of those rising and declining phases. And now it shows you where these resistances are, where we call that a sell zone. And now if you look here, look at each of these declining phases and how they bring a decline when both of them lines up into what we call a nesting. That's coming right over here. And you can see we expect Apple to be moving down over these next 2 weeks. And in this resistance zone, and then moving up again in towards the end of the year and even into January. So this would be helping the market move down into this buy zone. Why is that a buy zone? Well, it's a buy zone because Apple on the weekly chart right over here is in this upward trend, and it's not likely to get any kind of a breakdown. So then that becomes a buy zone because the dominant is the weekly, and if it pulls down into this expected area below 117.5, that would be the area we would expect it to be moving up again over 125. This explains to you why we not only use the cycle analysis for timing as we do, but also why I believe that it's going to help the market move down in the next couple of weeks, and then the market will be recovering and moving up again. You can see the clarity of the cycle analysis in here in each of those rhythms, and you can see the benefit of the slim ribbon when it's widening or staying wide and moving up. It keeps you in this bullish mode. You can see when you have a cycle that moves down to correct, you go neutral and then positive again. Each of these cycles, 1, 2, 3, 4 of them, gave you higher highs and higher lows. Those are bullishly configured. That is what defines an uptrend. And then when you look over here, all of a sudden it failed lower, and here it's failing lower, and you're building what is an extended triangle over here, and we'll see if it holds that support buy zone and then moves up as expected, or if it would move below this area at 107, that would be a breakdown, and that would be bad news. We don't really expect that. Again, in Apple, the buy zone is in the next couple of weeks under 17.5, outside down to under 114, under 117.5, maybe to 114, and then up again over 125, maybe to 130 as we see this pattern. So a dip in Apple, and then a dip in the stock market, we think, during that period. There's your weekly chart right over there with cycle analysis. There's your daily chart right there with very, very clear cycle analysis and levels all marked out that shows you the resistance, the support, the buy zone, and then where we expect in price and time to be able to move to the long side in here again in Apple. Great stuff. Just love that. So that is a look at Apple weekly and daily cycle analysis. Wanted to show you that in some depth because you get a good sense for how we really understand the markets in a very different way. When you learn cycle analysis, you will never look at charts the same, and we say that all the time. So please do go check out our workshop on cycle analysis.